Welcome, dear traders. As usual, we start the day with a review of the Asian session. This week, Joe Biden has started his trip to the Asian region. He will hold talks with the Emperor of Japan and the Prime Minister of the country, as well as with the political leaders from India and Australia in Tokyo. The main goal of the tour is to expand greater US economic engagement with the Indo-Pacific region and to counter China's influence in Asia. Joe Biden highlights that his main priority is to cap high inflation in the United States. Given that inflation fell to 8.3% in April from a March reading of 8.5%, Joe Biden's strategy seems to be working. However, core inflation, which excludes energy and food prices, increased last month. Bear in mind that this indicator is considered a more accurate inflation measure. For this reason, economists believe that inflation has not yet reached its peaks. Investors think likewise. Last week, the sentiment in the stock market remained pessimistic, so stocks closed on Friday with a new anti-records. The S&P 500 and the NASDAQ indexes looked a seventh straight week of losses, the longest losing streak in more than 20 years since 2001. The Dow has been dropping for 8 weeks in a row due to waves of sell-offs. The index has shown a weak performance for the first time in almost 100 years since 1923. And these sharp drops signal a high level of uncertainty in the stock market in recent months. In the Asian session, the US stock futures managed to rise. However, taking into account rate hikes, soaring inflation, and foggy economic prospects, such a rebound is likely to be short-lived. Economists reckon that high inflation was the result of the Fed's actions to boost the economy during the pandemic downturn. They contemplate this quantitative easing was one of the main reasons for the currently surging inflation. Of course, businesses and households were able to stay afloat thanks to low interest rates. However, printing money by increasing the money supply inevitably leads to inflationary pressure. There are also many other negative factors. Therefore, the US dollar is now steadily climbing, but it's also heading for the oversold area and the sharp drop afterwards. Last week, the US dollar index incurred significant losses for the first time in 2 months. Apparently, rate hikes have already been priced in by investors. For this reason, the US dollar index is unlikely to advance again amid key rate increases. In the Asian session, it was falling versus its main rivals, moving in the bear corridor of 102.41 and 103.05. At the time of preparing material for this video, it lifted lower to 102.46. A rollback to the May low of 102.35 looks even more possible. Last week, the US dollar index lost about 2%. As a result, the yen was able to gain momentum. Bears are extending pressure on the greenback, while the yen is the most stable. Its appeal as a safe haven currency is also growing. At the same time, the Bank of Japan maintains its ultra-loose monetary policy, so Japan, being the third largest economy in the world, keeps inflation under control. Given the geopolitical tensions in Europe, galloping global inflation, and the possibility of a recession in the United States and the other countries, the yen is winning back favor with the traders. Today, the dollar-yen pair climbed by 0.2% to 127.61. In the Asian session, it was consolidating in the range of 127.12 and 128.05. with the yen maintaining its bullish bias. The Aussie showed a similar dynamic. The US stock futures jumped sharply in the Asian session, boosting a rally of risk-on currencies. And the Aussie was able to consolidate above 0.7050 after a 2-week growth. Analysts assure that such a positive start of the week may bring more gains for the Aussie, as at the same time the greenback seems to be losing steam, especially after a short-lived rally of the US Treasuries and a decline in yields. As long as the AUD-USD pair remains below the 0.7100 level, it will retain most of its early gains. The pair was trading in the Asian session at 0.7102. It was moving in the green zone between the resistance level of 0.7126 and the support level of 0.7037. The Australian stock market climbed as well. Shares of heavyweight mining companies advanced the most. Prime Minister Scott Morrison considered defeat after the federal election on Saturday, and Australia's centre-left opposition party toppled the Conservative government with a newly elected Prime Minister, Anthony Albanese. Now Australian traders are sitting on the sidelines, waiting for more clarity, and the new government may take steps that could be either beneficial or harmful to the stock market, so there are certain risks for the investors. However, the newly elected Prime Minister has already outlined some plans. In his victory speech, he said that relations between Australia and China will remain difficult. He made such comments a few hours before his trip to the summit with the leaders of the United States, Japan and India. Given that China is Australia's main trading partner, such statements are not very optimistic for Australian business. And we wish you only positive trading results. InstaForex TV team keeps close tabs on the latest market events and share them with you. Feel free to leave your feedback. And that's all for now. See you soon.